Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to cover off some important housekeeping details about the session, and then I'll introduce Rob. Alrighty, first and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so it was a rare slow news week. Retail sector seems to be doing pretty well, and interested to hear Rob's thoughts on that, and very excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, I'll pass over to Rob Roy. Rob, how you doing this evening?
Good, Zach. How you doing? Welcome everybody to TradeFinder Live. And you're right, Zach. The retail sector is doing pretty well, led by Lulu. If I remember right, you actually purchased some Lulu clothes for your workout stuff, didn't you? So you helped with this this quarter.
Yeah, it was all me.
Not trying to call you out or anything, but that has been one area of growth is in the men's apparel. But while we're talking about that, let's just go ahead and look at, you can see the sector here with PVH, so covering some other areas in the retail sector. So basically what that tells you is the consumer is still spending. But let's get to looking at the charts of the market, and wow, this is a really well-formed triangle. Now, we've been talking about this triangle for about a week or so now, and a couple things to note. I was leaving it open for interpretation if people wanted to view this as a descending triangle with those lows there around 380 and then clearly the lower highs. So you could make an argument that we had a descending triangle, but the way we're forming this, I would be hard pressed to say this is not a good old-fashioned symmetrical triangle. And look at today, a doji today right smack in the point of the triangle. So I don't think we're going to have to wait much longer to figure out which way this market's going to go. We're going to have a pretty sizable move based on the size of this triangle. If you're newer with us and haven't viewed us before, when we have these triangles, triangles are kind of how I made my claim to fame here in the world of options with the triangles and the strangles that we set up with them. But you look at the mouth of the triangle. So you measure from the low to the high, which is known as the width of the triangle. And usually when you get a breakout of the triangle, you get about 100% move from that width of the triangle. Now, when we're putting on strangles, we look for 80% because that's where the higher volatility move is. And the last 20% usually is on lower volatility. So you get a volatile move for the first 80%, and then kind of a little drift for the last 20%. The volatility comes back. So even though you're continuing to move in the direction of the breakout, you lose that volatility edge. So why wait? So we look for about an 80% breakout from the triangle. So just to give you an example, the low is 360, and we'll call the high 420. That's what we did in the weekend update. So that's about 60 points on the SPY, which equates to 600 points on the SPX. So again, you can see a pretty sizable forecast breakout. Now, when we see one of these triangles, we want to look at where the ADX is. The ADX is average directional index, and it gives you a measurement of the strength of a move. So when you see the ADX moving up, it's telling you there's strength to that move. For instance, when we had this move to the upside here within the triangle, you can see the ADX was moving up. So that's telling you that was a fairly strong move. A common misconception is that when the ADX is moving up, it's telling you that was an upward move. That's not true. When the ADX is moving up, it's just telling you the strength of the current move, whether it's to the upside or the downside, has strength to it. So in this case, it was an upward move, so there was some strength there. But since then, we've come down, and you can see the ADX has worked its way down and is really low. And I would love to put on strangle on the SPY for our alert subscribers at EWOtrader.com. However, it's just a little bit too expensive. We, on our alert service, limit the risk per alert to $500. And in order to try to create a strangle here, and we do go out of the money, we look for that ideal delta around 25 or 30, it's still too expensive. You have to go too far out on the delta curve, which gets you down into the flat area. So when you have a scenario like that, the alternative is you wait for the breakout and then make a directional move based on that breakout. So that's what we're going to do here with the SPY, is wait for the breakout move, again with that doji right in the point of the triangle. I'm not sure we're going to have to wait too long to figure out which way things are going to go. But you wait for a directional breakout with follow through, and then you just trade the directional move when a strangle is too expensive. But obviously the beauty of a strangle is by buying an out of the money call and buying an out of the money put, you don't care what direction the breakout is. It just needs to move. As long as the underlying security moves, you can make money. And the way we set them up is that if, and there's still that if, it still has to break out. But if the security breaks out of the triangle, we're set up to make money as fast as mathematically possible. But there's no guarantee you're going to make a gain, because you still have to have a movement. But when you have a triangle with a doji right in the point, and you've got the ADX down here around 13, boy, that is a really great setup. And if you had a larger account, putting on a strangle with the parameters that I just described makes an awful lot of sense at this point in time. Unfortunately, it's outside of the risk parameters at EWOtrader.com, but that is a really nicely formed triangle, and it just, you start foaming at the mouth because you know you're going to get some sort of a directional move. We put the Elliott Wave indicator on, and as you can clearly see, there is no 5-wave impulse pattern. It's in a corrective pattern, which a triangle is. Flats, zigzags, and triangles are all corrective patterns. So which way are we going to go? Can't wait to find out. Looking forward to seeing that move. As Zach mentioned, there's not a whole lot of economic news, etc. this week. So what's going to be the trigger? Is it going to be some sort of a black swan? Are we going to have another bank that shows up? It's hard for me to believe that all the banking woes are done. That's just it. We're finished. This feels like perhaps there's one more shoe to drop. Maybe it's a big bank and that creates a breakout. Who knows what's going to happen? Maybe it's some good news somewhere that creates a breakout move. But when we look at the TNX, so here's the 10-year, you can see that we are in a 5-wave to the downside pattern. This makes me nervous. We've talked about this before, but I'll reiterate it here. We have this support area around 34. We put the moving averages on. You can see we did break above the 10-day moving average. So a little bit of a move back to the upside. We tried to break below that level at 34 there on the 24th of March, but no follow-through day. So immediately back up. You see these things that we talk about week after week after week. And I know that some of you that view us week after week probably get tired of hearing me say it, but that's the importance of having a follow-through day. There's a lot of head fakes in the market. So we break down, it looks like, oh man, rates are going to tank because there is nothing to stop rates from going down. If they break that level of 34, we're highly likely coming down here to 2.7 on the 10-year 27. But we have to break that level first, and you have to break it with a follow-through day so you don't get caught in a move like this thinking, okay, here we go, we're going down in rates. Let's buy bonds, and then all of a sudden, oh, rates jump back up the next 2 days. That was a head fake. So I think that if we can stay in here, I've been saying this, if we stay in this range of rates, the market can handle this. The rates aren't so high that it's going to be a detriment to the markets. Clearly, rates moving up is not the ideal scenario for the Qs or for tech stocks, but staying in this trading range, I think, is ideal. If we were to go up and label this wave 4, and by the way, if you're not familiar with this software program, it's called Profit Source. You can find out more about it at hubb.com. hub.com. To me, it is the best Elliott Wave software that exists on the market, and I can tell you it is programmed exactly to the mathematical algorithm that Ralph Nelson Elliott wrote. There's a lot of Elliott Wave software out there that have personal adaptations of Elliott Wave. This is not one of them. I call it pure Elliott Wave. But when we sit here, if we were to move up here, when this shows you this, it's not telling you, hey, we're in the wave 4. What this means is that wave 3 is the current wave. Notice that wave 1 and 2 are in purple and wave 3 is in green. That's telling you the wave 3 is the current wave. If we were to go up here, then this is an area where you could expect to see the wave 4 label before potentially moving down and having lower rates into the wave 5. So we're still in the wave 3, but with these last 2 days, it looks like maybe we're trying to go up and label that 4, but wow, if we go up and label that and then we start looking at rates that are going to break that level, that concerns me for the equities market, because remember, with bonds, prices and yields moving in inverse direction, and if you get yields moving to the downside like that, that means prices are moving up. That means money is likely leaving the equities market to go into the bond market. Clearly, that's not going to be good for an upward breakout scenario out of the SPY. So that's a concern. Now, on the positive side of things, when we look at the dollar is in a 5-wave to the downside pattern. And with that wave 4 right at the 38.2% fib level, it's held, and we're just making a nice orderly march lower. Now, right now on the dollar, we're right in this area of potential support there at 102. If we break below that, I would submit to you it's probably not very long before we go down and make that wave 5 low. So very similar to we have support in the TNX, the 10-year, we have support on the dollar as well. But if the dollar breaks below here, that could be viewed as a positive. And it's nice that with all the banking stuff that's going on, that we haven't had this big surge higher in the dollar, meaning that there's panic globally and everybody's piling into the dollar as it's viewed as the currency of last resort. That hasn't occurred. So that could be viewed as a positive. So we are just teetering. I think I talked about this last week about the skating on thin ice analogy, and we still are. Now, I was using that before talking about the banking sector with the fact the Federal Reserve raised rates so fast, etc. I heard some commentary on the financial networks that felt like the Federal Reserve should have just boom, gone hard with rates and then let it go, rather than this exaggerated move up here, because it's continuing to catch banks off sides on the interest rate trade. That made sense to me, but that's past history now, so that we can't go back and change things. So if the dollar was to break 102 and drift lower, I think that could be viewed as a positive for the equities market. But if 102 holds and the dollar starts to move back to the upside, then that's not going to be so good for looking at a potential move up in the SPY, breaking to the upside out of that triangle, if you will. So yeah, concern right here with where we are in this 5-wave pattern. Let's see where we go from here. And I think that has a lot to do. We sent out an alert, and I usually do this in a different order, but since I'm talking about it now, I'm going to go ahead and show you. Normally we talk about an alert that we close for our alert subscribers at EWO.com. And this is what our alert service looks like. Every single alert we send out has one of these tabs connected to it with a trade ID, the symbol, what the strategy was, which of our portfolios it was, the actual trade, etc., what the results were. But you can see on top here, we did send out an alert today on the SLV in our impulse strategy, because if we take a look at the SLV, and just invite you to visit our website there at EWOTrader.com. But if we take a look at the SLV, Zach, I might be stealing some of your thunder here because I feel like probably the metals are going to get asked in the Q&A. But look at the setup here on this zigzag. Now, if I turn the Elliott Wave indicator on, again, no 5-wave pattern. It's in a corrective pattern. Which is it? Well, clearly it's in a zigzag pattern, and it's a very well set up zigzag pattern. in my opinion. And then when we look at the DMI, very supportive. You have the ADX moving up, good separation between the positive directional indicator. The buyers are in control. So looking at that, it looks like SLV wants to go higher. So two things here to take a look at. Are we a little bit early? Maybe, but I didn't want to miss this move because there is a lot of resistance right there at the 61.8% level. So if we continue to move up, we'll still have a profitable trade, and then we'll take a look and see, do we want to take that gain? Is the DMI still supportive of breaking through this resistance and going up and hitting this 100% extension on the C wave, which is where it should go based on the B correction? It should go up to 24. We should see the SLV at 24. Or do we want to just take a quick gain and exit because of all this resistance here? To me, in my opinion, the way I look at things is this will have a lot to do with it. If we get to this 61.8% level, is this DMI still so constructive as far as supporting the continued move back to the upside? On top of that, then we have to go back and revisit what we talked about with the dollar. We're going to need the dollar to break below that level there at 102. So if the dollar were to break below 102 and start to move down to that wave 5 target, you go back, that would likely mean, in conjunction with the DMI, that we do break above the 61.8% level and head up towards 24 on SLV, and we have a really good trade. So we need those two things to occur. We need the SLV to break above this resistance at 22, and it would be super helpful if the dollar broke that support and continued a little bit lower. So if we have those two things, then we have a good trade. But even without the dollar, if the dollar just churns and we see the SLV move up, we'll take a look at when it hits the 61.8% level, go back and take another look at the DMI. Is it still supportive? If it is, then we stay in the alert and look to see if we can break above 22. I would say that if we break above 22, it's probably not a very long-term move to get to 24. You can see the resistance there. So if it breaks above that, shorts will have to cover, and you could see a pretty quick move up to that 24 level. So we do have the potential of having a nice quick short-term gain there, but I've gone through and talked about the things that need to occur within that. So it's a pretty interesting alert. So rather than just showing you something that we had closed down and gone through, I thought I would share with you something that we just did today, and then you can follow along with the reasoning. I've given you the things to look at, and you can take a look and see for yourself and have an idea of what we're doing in this position. So I thought that might be something a little bit different to look at for you. So let's take a look at the rest of the markets. We'll get a look at the diamonds here. So looking at the DIA, and you can see that it's kind of consolidating. Take the DMI off there. And with the Elliott Wave indicator, again, also not in a 5-wave pattern, but we talked about this zigzag that completed. Look at that. You know, I applaud you guys for being here from wherever the various social media platforms you are watching, or you were watching from. If you've not been a big fan of Elliott Wave in the past, hopefully watching these and seeing the things that we do with Elliott Wave will perhaps make you more interested in adding that as part of your trading repertoire. I just think if there was one indicator, I mean, you know, there's tons of them out there, but if there ever became a point where they said you can only pick one, you only get one indicator per trade, I would look at Elliott Wave. But luckily we don't have that, and we like to look at our confirming indicators, the DMI of which is one that we just looked at. But right here, the zigzag pattern just nailed that 100% extension, and we've been consolidating since on the DIA. Now we have moved up to the 61.8% level, which is what usually happens if you get an extended C wave, which means that unfortunately we have set ourselves up and qualified for a potential move down to that 161.8% extension, which would mean a lower move in the DIA, but we got to break 320 first, and same rules apply. You got to break 320 with a follow through. Notice the difference in the setup here, a completed downward zigzag pattern on the DIA and a just amazingly well set up triangle on the SPY. So they're kind of not, they're in sync in that they're both in corrective mode, but they're not in sync as far as we don't have that really nicely set up triangle in the DIA that we do in the SPY. Let's take a look at the Qs. I know everybody's interested in the Qs. Kind of already talked about rates and how they are going to affect them. Now we do have this 5-wave to the impulse pattern. Not such a good day here because rates are moving up. So rates moving up, a little more challenging for the tech stocks if rates were to break to the downside. So we come back and look at the TNX chart. If we did break below 34 here, then yeah, you're in a scenario where if all hell isn't breaking loose in the markets, then perhaps we can move above this wave 3 high and go up and hit that wave 5 target on the Qs. Interest rates moving up is going to make that more challenging. It doesn't mean it can't happen. It just makes it a little bit more challenging. Looking at the moving averages, even with this move down today in the Qs, we're still above the 10-day moving average. We ran right up and hit that wave 3 high, logical point of resistance. So I think that makes a lot of sense here. I don't see anything yet that would change my mind on the possibility of the wave 5 going up and hitting that target. This is called the tap box time and price projection. But I've given you interest rates in the dollar, so you know how all that stuff plays in. But for now, even with a move down, we just kind of bumped our head against some resistance there around that previous 3 high, and we're consolidating. If you're bullish, that's actually what you want to see, is you want to see this consolidation calm down a little bit, let some energy build up to break through that resistance area and perhaps run up and hit that wave 5 target. All right, let's look at the IWM, small caps. Not having nearly as much fun as the Qs are. If you look at the small caps as a risk on type thing, then you're like, I'm not feeling too good about where things are as based on the IWM, but we are consolidating down here at 170. Just trading a bit below the 10-day moving average the past few days, about the past week, if you will, but holding 170, which is really important, because if we don't hold 170, we have a little bit of support at 165, and then it's, what is it, Zach? If the IWM doesn't hold 165.
Katie, bar the door.
There we go. Katie, bar the door. It's interesting with the live market updates that we're doing now on the Hub channel. By the way, please, if you haven't subscribed to the Hub channel, go there. We're doing live market updates every Friday, early evening, late afternoon on Fridays after the market closes. You can find it at Hub Financial. That's where you're going to find our live market updates. And talking about Katie bar the door, there was a lot of comments on the live. What, Katie, what is that? And I guess you just got to be an old school country person to get the whole Katie bar the door thing. But it's the idea, shut the barn door or the horses will get out and you lose all your horses. Anyway, it's an old school expression, but it means watch out below. Is really what it means. And in the whole horse thing, it's like all the horses come flying out of the barn and it's look out. Anyway, so if we hold 170 here, we have a chance of potentially going back up and trying 190. So the positive is we are holding 170. The negative is we're continuing to trade right around 170, and we have a small descending triangle here. Hopefully you all saw that. Remember, Elliott says, don't discount the small triangles. Don't just get so caught up in looking at the big ones like we have on the SPY. Pay attention to the little ones too, because they work just as well. So there's going to be some sort of a breakout on the IWM. And contrary to some things you may have heard or read, a descending triangle does not mean that you're going to have a downside breakout. Whether you have an ascending, descending, or symmetrical triangle, they all work the same. You're going to get a breakout. But a descending triangle doesn't mean a downside breakout any more than an ascending triangle means an upside breakout. You're going to get a move. So that's about a 10-point mouth there that we just went through and described how triangles work. So about a 10-point move here on the IWM is coming in the not too distant future. Which way is it going to be? If it's to the downside, ooh, that means we break 165, because a 10-point to the downside move means 160, and I don't think that's the end of it. If we get down here, then I think there's a lot more to the downside. So if you're bullish, you want to see these moves to the upside. This is where option traders, have a little bit of dichotomy in our own brains. We love seeing things break to the downside, because when you're trading options, you get a volatility spike and the market moves faster to the downside than the upside. You can make money far quicker to the downside in trading options than you can to the upside. However, we're aware that people have IRAs, they have 401ks, they have retirement plans, and more people benefit when the market breaks to the upside. So I tend to root for upside breakouts just because of that, because more people benefit to upward moves. But for me, from a selfish standpoint, man, I would love to see a downside breakout of that SPY and a downside breakout here. But that's my selfish trading side, because I've made far more money to the downside than the upside over the years. All right, let's take a look at Bitcoin. And here we just, when Bitcoin is really trying to take off and the cryptos are all catching a bid, now we get all this regulatory talk here, and just can't leave them alone. On the positive side, we've hung in there, down, tapped this 10-day moving average on the low, trading right. Look how this, look, you talk about the software, I talked about it earlier, how good it is. Look at this 5-wave pattern on cryptos. But I get asked, or used to get asked a lot, does Elliott Wave work on Bitcoin? When we went through that consolidation period, people didn't ask as much, but here you have a 61.8% wave 4. That's supposed to promote 100% extension, and we extended 101%. And there was the forecasted tap box, and we've just been doing nothing but going sideways right between the two levels in the tap box. It freaking nailed it on Bitcoin. So where do we go from here? Well, yeah, can the regulators leave them alone? I think if they do, perhaps we can get another run here, another leg higher. I am a little concerned with the vertical nature of this move. That bothers me. One of my rules, Robisms, they're calling them now, is vertical moves. When something moves vertically up, usually comes vertically back down, and vice versa. So that makes me a little concerned. The positive side, if you are bullish on Bitcoin and the cryptos, is it is consolidating this vertical move very well, especially with all the regulatory news in the crypto world, etc. Yeah, I feel like we have enough to worry about right now to be attacking the crypto world. I just don't, it doesn't feel like the timing is right for me. That's just a feeling. You may disagree. That's fine. That's what makes markets. But just looking at the chart, it was a just absolutely spot on, perfect Elliott Wave pattern. And we're consolidating right here in the middle of the tap box. Only negative, again, in my opinion, is the fact that that wave 5 was so vertical. Can it hold it? Can it consolidate here and make another leg higher without having to retrace any part of that vertical move? That's the only question that exists on Bitcoin as far as I'm concerned. Looking at the foreign markets, the EWA for our Aussie friends, and as you know, on Thursday night on our insiders meeting, which is for our alert subscribers only at EWOtrader.com, where we do an extended Q&A, we do look at the XJO because we have a lot of Aussie subscribers and some that like the XJO versus the EWA. Others prefer it the other way. So we just look at one of them on Tuesday nights, but on Thursday night, we go through and analyze both those securities. We are holding 22. That's really important. You have to like that because that is a major point of support there at 22 on the EWA. If we can hold that right around that 61.8% fib retracement level, the longer we hold here, the better chance we have of making a break to the upside and going up to hit that wave 5 target. But gosh, if we don't hold 22, then there's not much to support the EWA on the way down because that was a pretty good March there. There's no resistance. So if we break 22, we probably come down to around 19.5 rather quickly. However, we haven't done that. you have to break 22 with follow through. We broke 22 here on the 15th of March, no follow through. The next day back above 22, and we're holding in there. So far, so good on the EWA as far as potential to move higher in the not too distant future. Looking at the Canadian market, the EWC, also the 5-wave in here. So we're in corrective mode here, and this is different. This is flats. We did finish this zigzag pattern here. So there was your zigzag again, right to the 100% level. And then we came down and said, wow, if we're going to go to 100%, let's just test those lows from December, which we've done back above the 10-day moving average on the EWC. So holding there at 32 is key on the EWC. That's pretty impressive. So, looking pretty good there on some of the foreign markets, at least holding where they need to hold right now, and hoping that we don't get some sort of a significant break to the downside. Looking at the India market, the INDA, and man, we are back below the 10-day moving average. And we've been talking about this on the low here from the 15th of March. We did get in this tap box. We didn't quite make it to the midpoint, but we got in there. Was that enough? Was that the end of the move? We got to get back above 39 now, and we haven't been able to do that. We gave it a couple of shots. We tried right here in what's that, the 13th, 14th of March, and then had the big move lower, and we worked our way back up, and we bumped our heads a couple of days there on the 23rd and 24th of March, and now back below the 10-day moving average. It just feels like we likely are going to come down and hit that wave 5 target around 37.5 as we are working our way down below the 10-day moving average. It doesn't have to happen, but if we were going to retrace back to the previous 4, indicating that that wave 5 was done and complete, you would have needed to get back above 39, and we couldn't do that. We couldn't get back above 39. So looking at the German market, the EWG, I'm talking about those on YouTube that have been, really pro the German market have been flexing because that was an impressive move. And we're holding here. We're holding really well. Tried to break below 27 here, but all we did was come down and test that wave 3 high. That makes a lot of sense. Pretty classic Elliott Wave stuff there, and then immediately got back above the 10-day moving average, which is extremely important. Now we have 2 very small doji days here, so there is some indecision right now on the EWG. So what does that mean? You could also make an argument that we have, taking all the rest of this stuff off, a small symmetrical triangle here on the EWG. I look at that and think that that's pretty well formed. And with 2 dojis, all this indecision right at the point, it looks like we're going to get about a 2-point move here out of the EWG. No way to know what direction that's going to be. You can look at the fact that, hey, well, we had a wave 5. Once you complete a wave 5, you go in corrective mode. Is that what's happening? Is that what's happening? And, if we break to the downside, it's almost the exact move lower down to the previous 4. So with what the move is expected from the triangle, if it was to break to the downside, we come test that wave 4 low, which is what happens when a wave 5 ends. So for our friends in Germany, let's hope that's not what happens. And then what really occurs here is that we get an upside breakout out of the triangle. We take out this previous wave 5 and we go on to an extended wave 5. So that would be the bullish scenario. They're hoping for that, but just with the formation of the triangle, we could go either direction. And, I think it's pretty well formed. So I do see a 2-point move coming in the EWG. Just don't know which direction that's going to be. See how it plays out. All right, looking in some of our past case study considerations that we've identified in previous TradeFinders. We had already closed Google and Apple. We had sent out alerts for those to our alert subscribers, closed them both out. I was going to show you those tonight, but I wanted to show you that SPY, so I'll save those for next week. But looking at MPWR, you can see that we entered that one on the 14th, and this is the one I talk about that is wild to watch intraday. those bars don't look that big, but when you're talking about a $500 stock, these are 20, 30, 40 point intraday moves. It's just all over the place, this stock. So it's fascinating to watch from an intraday standpoint. Now we're at a point where we need to hold. So we had a little bit of a move down over the past couple of days. You can see we've got a wave 4 now at 31%, which is somewhere between 23.6 and 38.2. I don't know if that's going to be strong enough to hold. Maybe with the added assist of the support at 460 there. We put the moving averages on and we held the 50-day moving average today, but we are below the 10-day moving average. This is a little bit of a concern. If we could just get above 500 on MPWR with follow through, we'd be off to the races. See, look what happened here. We broke above it on the 3rd, no follow through day. Broke above it on the 8th, no follow through day. Broke above it here once again on the 23rd, no follow through day. Again, highlighting why I'm constantly harping about one day doesn't mean anything. You have to have a breakout, whether it's a triangle, major moving average, support resistance, whatever. You have to have a breakout and a follow through day. Don't get caught up in the head fakes that occur day in and day out in the markets. But for MPWR, if we don't hold 460, then I would say this is one you let go. Or if you wanted to look the other way, you could make a really strong case. I think that, well, that was a pretty vertical move there, or at least a nice move without a lot of correction. And we're probably coming down to 360 if we don't hold 460. That's 100 points. That could be a nice trade if you wanted to flip it and go short. Again, we have to break 460 first, and we haven't done that yet. So far, so good. It's nice to see the wave 4 labeled. It's nice that we held the 50-day moving average, but it'd be nicer if we got back above 500 with a follow-through day. That would be far more ideal. Looking at FFIV, the triangle that we looked at on the 28th, and you can see here was the support, and then we had a fairly vertical move down here of higher lows. So pretty nicely formed descending triangle. And we take a look at it. And remember, we talked about this last week. There's no such thing as two false breakouts. You can get one. So if you get a breakout to one direction and then it comes back, then normally, if that's the end of the move, the directional break would be in the opposite direction. But when you have something like this where it looks like two breakouts, so you had two false breakouts, there's no such thing. When that occurs, what's happening is you're forming a larger triangle. So what we have here is just an extension of the lower highs. This still looks, let's go here with the line. This still looks really good. As far as a breakout, to me, it's just a little bit larger. If you're in a triangle, that's frustrating because time decay is working against you, but it's building itself here for a nice potential breakout. And normally when this occurs, you get rewarded for your patience because the breakout becomes stronger. You form a larger triangle, takes more time, more energy is built up. So you tend to get more of a vertical move out of the breakout. So I still think FFIV breaks out. I still like holding that triangle, seeing what happens from there. And then Amazon that we looked at back on the 7th of March. And here was the triangle formation there on Amazon. And the news that came out today from Alibaba, stock jumped to the upside because they're splitting it up. There was some talk about, well, Amazon should split up into different divisions and perhaps that could give them more value because the breakup of Alibaba was extremely well received today. So, of course, you have Alibaba, you're going to be talking about Amazon. Right now, we have that triangle pattern, and where we are now is, again, forming a larger triangle, or is this an upside breakout? I think that we extend these lines here and say that this is where the triangle is. It just formed a slightly larger triangle, and we're trying to break to the upside. And will we get some follow through with the Alibaba news out of Amazon tomorrow on a potential upward move or not? We'll see. We look at the moving averages, 10, 30, and 50-day moving averages all converging. We are below the 10-day, but above the 30 and the 50-day. I think Amazon's about to do something. It's going to take off one direction or the other. This is the kind of move that Alibaba got, this vertical break here. Are we going to do that? Again, we'll wait and see how that plays out. And then NVIDIA, we still have our in the money debit spread on NVIDIA, and looking at the chart, came back down a little bit, holding that 10-day moving average, which is key. Look what happened here. We tapped it on the low, and look at that doji, hammer doji there with the low of the day on the 10-day moving average. You know, we got the SPY in a triangle. We got NVIDIA with a doji, the low touching the 10-day moving average. So I don't think you want to do anything with that. If you're long, you hang in there. We had this nice breakout from the area here at 240, and now it's consolidating it. So we caught that initial break on a long call alert for our alert subscribers, and now we have the in the money spread, which turned out to be a pretty smart move. It didn't look like it when we were trading way up here at 275 on the 22nd, but when we came back down and we moved down through here, the in the money debit spread was the right move. As time goes by, that helps us. It doesn't hurt us. And so we can be patient now and wait for a potential move higher out of NVIDIA. The key is going to be, do we continue up in this wave 3 and perhaps move up to 320, or do we break to the downside and come down and form this wave 4? Too early to tell. Constructive here. We'd gotten overbought. We're back to the 10-day moving average, tapped it on the low, closed near the high. All those things are positive on NVIDIA. And right now the futures are up 14.5 on the SPYs. So indicating perhaps an upward bias to the open tomorrow. But as you know, there's a long time between now and when the market opens tomorrow. So see how that plays out. And then last but not least, before we get to the Q&A, we'll take a look at a chart of the VIX, which had been hovering there around 23. Look at that move down today. Pretty interesting that the VIX came down as much as it did, considering the trading action wasn't all that. My apologies. Yep. It's when you get 90 degrees in Florida, everything thinks it's springtime, and so the pollens come out, and yeah, that's what happens. You get yellow dust all over your cars. Everything occurs here. But looking at the VIX breaking down, now we're back down to 20. Not a whole lot of room to the downside if we're going to get an upward breakout out of that triangle. A little bit. Now, does it mean we have to hold 18 as a low on the VIX? No, we've been as low as single digits, but not in a while. It's been a very long time. And with these lows around 18, it just makes you a little nervous of, you know, do we come back down here to 18? And then the big move on the VIX is to the upside, indicating a likely breakout to the downside out of the SPY. Who knows? We'll find out. But it's just a tiny bit worrisome that there's not a lot of move to the downside on the VIX before we get down to this area of support around 18, 19, which is held for quite some time. As you can see all this. And we got to go all the way back to October 21 when we got down to 15. So can it happen? Yeah, it can. We can break 18, but it's been a while since we've done that. But that doesn't mean it can't happen just because it's been a while. So that's everything that I wanted to share. Let's see if we can find a case study consideration for tonight. If there's nothing that jumps out, we'll use that SLV as our, but yeah, there is nothing on the impulse side. So I do like that SLV move. So let's let you guys follow along with our alert subscribers, and we'll do SLV to the upside in that upward zigzag. That'll be our case study consideration for tonight. The difference being we'll guide our alert subscribers on the entry, any adjustments, and the exits. as you know, with TradeFinder, we find case study considerations, and then you're on your own on how you manage it from there. Or join us at ewotrader.com and we'll lead you by the hand from beginning to end as we go through that process. Before I turn it to you, Zach, I had a written request come in to look at Comcast, and I promised I would do it last week and I forgot. So I don't want to make that same mistake again. So before we get into the Q&A, to make sure I don't forget, I wanted to bring this chart up. And you can take a look that we do have the wave 4. So it isn't a 5-wave to the upside pattern. The wave 4 is right there at the 61.8% level. And there is a whole ton of support right through here at 35. A break of 35 changes everything. You break 35, then you're probably disqualifying this entire 5-wave pattern. And when you do that, you usually retrace the impulse move, which would mean that we retrace this move here and probably come down to 29. But that's if we break below 35, which we have not done. We've held 35 and we're in a qualified 5-wave to the upside pattern. We are above the 10-day moving average, but bumping our head here on a little gravestone doji there, bumping our head here on the 30 and 50-day moving averages. So if you're bullish on Comcast, you want to see it break above that 50-day moving average. There's some consolidation here, so you got a bit of a channel right through here in this area, trading range, if you will, between 35 and 37. So this is kind of one of those where I talk about this, that you go long if it breaks above 37, you go short if it breaks below 35. But for now, churning in this trading range seems to make a lot of sense at this point on Comcast. So sorry to put you off for a couple minutes there, Zach, but again, I'd promised that last week and forgot, so I wanted to make sure I got that one in. So with that, turn it to you for any Q&A.
Alrighty, sounds great. Thanks for that presentation, Rob. We got a ton of questions per usual, so we definitely won't get through all of them, but we will try to get through as many as we can with the time remaining. We'll start out with UNG. There was a lot of questions around UNG.
Yeah, I can imagine, because not a good day today. It was pretty ugly move there, and the fact that we broke below this low here that it set in February, and we moved to the upside and then came back down, and it was holding it even though it was below the 10-day moving average, but we broke below it yesterday with follow through today. 119% extension on the wave 5. It's still very oversold. This little bounce here that occurred got turned back. There's all kinds of inventory comments, etc. But the break of 7 there, significant, closing at 683 today. And it's hard to see where at this time of the year the catalyst is to move higher. It's also a little confusing to see how much lower can we go here on UNG. Obviously, we can go lower. It seems to feel like with this vertical move, if that's all the bounce we were going to get, we were way oversold. We got a bit of a bounce, but it went up to 10 and hit itself. That probably for the near future, we're looking at a trading range somewhere between 5 and 10. I think a butterfly between the 5 and 10 levels would do extremely well here with UNG based on the way things look right now. So we actually may look to do that for our alert subscribers. 5 being important, as you know, 10 being important levels. And the fact that we're in between here, we weren't able to get above the 10 level back there on the 3rd. We're coming out of winter, leaving peak natural gas utilization time of the year. So it's hard to imagine where's a catalyst now to move it back higher. I think a trading range in here makes a lot of sense moving forward. I just don't see a too significant move lower from here. 5 is, that's a pretty good move from here, but I feel like that would be the bottom. So if it wasn't too expensive to set up a 5-10 butterfly I think that's a trade that makes a lot of sense.
Thanks,
Figured
Rob.
out what was coming today based on today's move.
Yeah, absolutely. And you're spot on with SLV as well. There was a few requests for that. So we'll go over here to James, who's looking at maybe holding a long call position on SCHW.
Good old Charles Schwab. And there was some news. Again, discussion is probably better than news on the financial networks about Schwab through here. Obviously, pretty ugly move there. And as I've talked about, I don't like vertical moves in either direction. And so I feel like trading through this area right there, as long as we can hold in here, you could even make a case that that doji there is probably more like where the support is. So a little bit of a drift lower from here wouldn't surprise me at all, but I would want to see it hold there. So what's that, about 52, right in that area, 52, you would want to see that hold. But with this vertical drop here and the fact that we at some point need to go up and label that wave 4, we didn't do it with this move up to 60 here. I like this as long as we hold 52. A break of 52 would change my mind here, because then it means we're probably coming down here to this wave 5 low. But as long as we can stay above 52, it's precarious because we are below the 10-day moving average. But with that strong doji there on that big, huge bar that set the wave 3 here back on the 13th of March, as long as we can stay right here above 52, I think you can stay long. But if we break 52, yeah, it's probably coming down here, likely a very good short if we break below 52. But holding the long call, I would hold it if it was me right now, as long as we can hold the price of 52.
Alrighty, thanks, Rob. And as we said, you covered SLV in depth. We are going to go over to SoFi for Lisa.
We haven't looked at this in a while. A lot of people have been asking about this on TradeFinder in the past, but we haven't looked at it lately. Well, I guess that's why, because it hasn't done much. We've gone sideways here, a whole bunch of resistance here at 6. It tried it. You can see it wasn't able to break above it. What was it? First attempt was on the 22nd, and we've gone sideways here. We did trade and close below the 10-day moving average today, which that's not a real positive, but there's a lot of support here. So this is a really tight range here between 5 and 6 on SoFi. If we break 5, which I would be surprised, because then that means all of even aggressive funds, securities company, investment companies that have aggressive as their investment objective would also have to sell there. So I'd be surprised if we break below that. That wave 5 pattern has an 84% corrective move, so that's disqualified. So we're looking at this trading range between 5 and 6. If we break below 5, we probably come down and test here at 4.5, but that's not that far lower. If we can find a way to get above 6, we really have something going on SoFi. But so far we couldn't do it, and we closed below the 10-day moving average today, which to me indicates we're probably going to come down and test that 5 level again. Maybe we can gather some momentum and turn and try to move again. But we're in a range here between 5 and 6, a pretty tight range. Again, breaking below 5 doesn't give you a whole lot of room to the downside because there's so much support there. The big move, the path of least resistance, is a break above 6, but it's tried for 4 days in a row and not been able to do it. It has to do that for an upward move.
Alrighty, thanks, Rob. So you already covered the SPY really well. This is just a general question for Piotr. So how far out in options expiration would you go on an SPY strangle?
Based on the size of it, and we talked about this in the past, where I haven't got into the Elliott Wave time forecasting tools as much. I haven't been able to get them to work as well for me personally. Other people really like them. as some other people, and certainly not as well as the patterns have worked for me. So what I like to look at is how long did it take the triangle to form? So here we go back, and I would submit that October was when we started forming this triangle. I wouldn't be too upset if people tried to come in and say, no, it started at the beginning of December. This was a move lower. We came up here, and then this is when we started churning. I still like the low down there in October. So to answer the question, with the size of this move, I think you want to go to maybe July. You want 90 days out. 60 to 90 days is what we normally do on a strangle anyway, because of the gamma and delta and staying away from theta. So all the Greeks rolled into one. And in this case, with the size of it, I think you're looking at maybe a July spread at the earliest. I'm not 100% sure if there's July options on the SPY yet. I'm sure there's June, because that's a quarter. But if there's July, I think I would feel more comfortable with looking at a July time frame. If there's no July, looking at June, but being ready to perhaps roll that out if by some chance we don't break out in the next week or two, which, looking at this triangle, would really surprise me. I think the breakout is fairly imminent here.
All righty.
Could be by the end of this week.
So we're going to go over to Jay, who says, I'm very bullish on SI. I'm thinking it will go down to 160, 180 zone, and then another pop up maybe to 285, 319 zone. Can you check this one out? Pretty please.
So we're talking about $1.60. This company is going out of business. This will, I mean, they're literally going out of business, and they've announced it. This saving grace here, what would give you your pop, you say you're very bullish, what would give you your big move is if, it's been going on, so it's not that out of the realm of possibility, is if somebody came in and bought them. If somebody came in and said, hey, we want to take over the assets, we want to get involved in that space and crypto lending, etc., you could get a significant pop. That's super risky, though. That's what you're looking at. That's what you're banking on. It's a speculative trade. When you get into speculative trades with stocks that are this low, you can get massive returns, but the majority of them at this point go to zero. And unless somebody comes in and buys them based on what they've filed and what they've said, they're going out of business and they will go to zero. So this is a highly speculative trade on somebody coming in and wanting to take over their assets and get in that space, whatever their assets are. I haven't been following it too much here over the last few weeks. But if that occurred, then you could get one heck of a pop. But in my opinion, that's what you're banking on, because they've said that they're wrapping up shop and closing things up. So a buyout is your best bet.
Very well. Thanks, Rob. I see we are a minute after time. Do you got time?
Let's do one more real quick.
One more? All right.
Yeah.
And if we didn't get to your question, please know it has nothing to do with the validity. We just only have so much time in this session. So please take that as encouragement to attend the insiders meeting. As Rob mentioned, is every Thursday at 9 p.m. Eastern time for paid subscribers only. And there's a 45-minute Q&A session in that webinar. So obviously a very high likelihood of getting your question addressed there. All right, the last one we will end with for this evening is going to be CELH for Jordan.
Okay.
Who also says, thank you for all you do.
Oh, I appreciate the comment. Thank you. And Celsius went up, created that wave 4. We bumped our head on the 50-day moving average and came back. Now the positive was held the 10-day moving average. So a little bit of churn right here between the 10 and the 50-day moving average. It looks like a pretty well-formed 5-wave to the downside pattern, but we got to get below 90 here. So here, the issue here, this looks like it could be set up as a really nice downside trade. Breaking below 90, we probably go down to 70 pretty quick. But we're going to churn likely through here because there's a lot of congestion here between 90 and 85. So then I would amend that by saying a break below 85 and you got a great downside trade. If you're looking for this to go long, you're encouraged by the fact that we broke back above the 10-day moving average on the 21st of March. We did bump our head on the 50-day, but we've held the 10-day. You want to get back above that 50-day moving average. And then ideally, you would like to see the move above 100. So for me personally, at this point in time, and there's a whole bunch of resistance right there at 92, I would be a little bit conservative to the upside. I would want to see a break above 100 because then you got a good 20-point move. You got a really nice move to the upside there. But there's so much congestion here that I would want to see that break above 100. And to the downside, if you're looking to the downside, you've got a lot of support here to 85. I would want to see a break below 85. So to summarize this, if we break above 100, I think you got a great trade to the upside. If we were to break below 85, you got a great trade to the downside. In between here is a ton of congestion. So it wouldn't surprise me to see some back and forth here between 85 and 100 until it makes its move. But I would keep an eye on that one for sure, put it on a watch list. And if you see one of those levels broken, then you can make a directional trade there. And I think you'd be really happy with the result of that trade. Thanks everybody so much. As always, time's the most valuable asset we all have. We very much appreciate when you devote some of your valuable time to us. And we do our very best to make it an informative and educational use of your time. I hope you felt that way tonight. Thanks again. Have a great rest of your week. Look forward to